Hello, welcome back. We're at the Precious Metal Summit in Zurich, and I'm with George Paspalas, the President and CEO of MAG Silver. George, good to see you.
Good to see you, Peter.
It's been a year since we've called up.
Yeah.
It was actually here this time last year. At that point, you were waiting for some lights to go on and start production.
Yep.
It's happened.
We got plugged in and we're off and running.
Good. So talk me through the last 12 months.
Sure. So we got connected right at the end of the year, and we waited a year for that. But, you know, interestingly, during the period of last year, we made 9.3 million ounces of silver, putting Juanicipio underground material through the Fresnillo and the Saucedo plants that Fresnillo operate adjacent to Juanicipio. So, you know, we made $140 million of operating cash flow. All that's on a 100% basis. We're 44 of that, which obviously enabled us to fund our way through the delay and the final capital build costs, etc. So it positioned us well this year. January, we started commissioning the plant. February, we put low-grade material on. We got to commercial production in June. We hit the 4,000 tonne per day nameplate pretty regularly towards the late September. And then we just released our Q3 numbers. And you know, we're pretty happy with that. We pulled $11 million from the operating company back to MAG's balance sheet in Canada. So that's the first real repatriation of cash from the operation. During the course of 2023, we've put about together, Fresnillo and ourselves, have put about $100 million of cash flow into all of the working capital pockets within Juanicipio. So it's fully juiced up now. They can run the business, and then we'll just take the cash flow back to the respective shareholders. So
just run me through the cap structure to begin with, and then I wouldn't mind going into a bit more granularity in terms of the how it's split at the project level. But just to begin with, what's the cap structure? What's the sort of current cash in the bank? What are the quarterlies looking like regarding?
So look, we're tightly held. Right? We've got about 70% of our shareholders are precious metal institutions. A lot of them have been with us for a long time, waiting for this. And in fact, 52% of our shares are held in the top 10 shareholders. Fresnillo, our partner, is our second largest shareholder, holding about 9.9%. And we have about 103 million shares outstanding. So we've been very diligent on the way we've raised equity to build this, and very conscious of shareholder dilution. At the end of the third quarter, we had $59 million US of cash on the balance sheet.
Nice.
And then we hope to build that now as we go forward. We're really well positioned, and you know, you'll see in our Q3 release we showed all-in sustaining cash costs of $9.19, which reflects we were still ramping up, and we're certainly by far away from being a steady state operating production facility. So, you know, there's some expectation that those unit costs will come down. You're looking at $23, $22 silver, $8 all-in sustaining cash costs.
That must put you at
good
the
margin.
Quite lowest quartile in terms of operators at the moment, right?
It's very low, very high margin. And, you know, one of the most, I think, heartening aspects of what we've seen during the course of 2023 is as we're starting to mine significant tonnage now across the whole strike length of the Val de Cañas ore body, we're getting the grade we expect. Right? We're just under 530 grams per tonne of silver, AG on its own, no equivalent, silver. Our gold grades are good. They're just below 2 grams per tonne. Lead and zinc's in there. They're good contributors. You know, all in, you know, we've got $300, $350 per tonne of operating margin.
Yeah.
So that'll position us to get into 2024. We want to build a significant cash reserve on the balance sheet. Now, we want to make sure we've got the next 3 to 5 years of the mine plan covered with capital. We want to make sure we can fund exploration at Deer Trail and Larder. and then we'll start to make capital allocation decisions. As I said, we've got great shareholders that have been with us for a long time. Some point in time, we'd like to give them some money to go and buy a beer.
Yeah.
Yeah.
Well, talk me through, obviously at the project level, you own 44%, Fresnillo own the other 56. Within that private company that you both have ownership of, what's the debt like there? Is there debt that you need to pay off first before you start generating much higher returns? Because you usually see that with these type of ventures.
Yep. So there's an operating company, Minera Juanicipio. It's got two shareholders. MAG Silver owns 44% of the shares of Minera Juanicipio. Fresnillo owns 56%. Every capital contribution that's made is on a 44-56.
Yes.
In the original capex for the build was about $440 million. On a 100% basis, ourselves and Fresnillo loaned the operating company just over $200 million of that 440. So there are intercompany loans within that joint venture structure in Mexico, to our account, $110 million that the ourselves and Fresnillo can call repayments on those loans whenever there's cash available.
Yeah.
That's a very fiscally preferred pathway to bring cash back because there's no drag on that.
Well, you're not beholden to any third party to call in early.
And it's just straight pay the loan, money comes back to Vancouver.
Okay.
And we will balance with Fresnillo what the right level of leverage is to have with the operating company as we go forward. But in the first instance, our preference is to pay some of that loan down.
Yeah.
Then we have satisfied all of the operating and profit criteria to be able to pay dividends.
Good.
And so at some point in time, we'll switch from intercompany loan repayments to the joint venture paying the shareholders dividends.
And just run me through, I guess, the current timeline in terms of when the loan could be paid off.
Well, as we generate cash flow, we'll chip away at that now over the course of fourth quarter 2024. But I'd say during 2024, we'll also kick in the dividend payment schedule.
Okay.
The only downside to a dividend payment is it does incur a 5% withholding tax drag on it. So it's not quite as attractive as the loan repayments.
Yeah.
But, we got a lot of cash. We're going to bring cash back. At some point in time, it'll be via dividends because we would have reduced the intercompany loan amount to the agreed level of leverage to have on the project.
Because obviously you're in a pretty good position now because you're not the operator of this mine either, are you? In terms of MAG as a company, you're getting very substantial good cash flow from Juanicipio. And I guess looking further forward, you've had such success of this model of sort of finding a good project partner, having them operate it.
Yep.
And I personally think it's a great model.
Yep.
What's next for you? Do you? I know you've got Deer Trail and you've got some other assets that look very promising that obviously you need to put some money into and shore up and find out what's potentially there.
Yeah.
But does this not put you in a pretty good position to go hunting for some other projects?
Potentially can.
Yeah.
Right. And thank you for recognizing what we're good at. Right. And that's exploring.
Yeah.
And then realizing when's the right time to partner.
Yeah.
Right. So, and probably our most value add exploration opportunity in MAG is exploration at Juanicipio.
Yeah, 100%.
Right. We have only explored 5% of the surface area of the joint venture ground. And there's very compelling technical justification to say that there's potentially another 1, 2, up to 3 of these upwelling zones on the joint venture ground. So finding another one of those there where you have an established mining operation and a debottlenecked, smooth processing facility, very accretive discovery to have.
Does just to add on that though, with the current ground, the JV land, would that be your responsibility to go and drill? Obviously, now that Fresnillo own 56% of that land, would you share the cost to go and explore? And
all of that joint venture ground is 56-44.
Yeah.
So Fresnillo, the operator, but they consult with it. We work together really well, and we have a collaborative approach to defining drill targets and where we want to drill. And they pay 56% of the drilling costs, and we pay 44%.
Good.
Yeah.
And do they see that as a priority as well? If
Absolutely.
you say to them, look, we want to go and find some more
Absolutely.
Juanicipio, that they understand the value there.
There is great alignment between both partners here that the most prospective area for further high-grade discoveries is on the joint venture grounds.
Very good.
It's a very compelling story. It sounds almost, I don't know, Cinderella-y used car salesman type, but the potential future upwelling zones in this area of the Fresnillo trend are most likely on the joint venture ground.
Great. How does that work in terms of, obviously you've got your output now, you've built your mill. Does finding another Juanicipio, does it fundamentally change the company, or does it just extend the mine life of what you already have?
It depends on what you find.
Yeah.
You know, we have the Valdecanes vein, but we've found 6 or 7 other veins near there and crossing it, right? So as we expand the mining operation, we'll go and mine those associated structures. We have to optimize our plant. 4,000 tonnes per day, maybe de-bottleneck it. Where does that take you to? 4,200, 4,500. Incremental gains, but highly cash flow accretive, because most of the capital is deployed, right? So this is just adding to that. If we go find another upwelling zone, that's a game changer. And back in 2017, when we designed the current facility, we were very deliberate. We designed it with an exact footprint for a second plant.
Good.
Okay, up to the point where there's sort of pipes coming to the side of the building with a flange on that. When you put the second plant in, you just tie it in, right?
Nice. Okay.
So it would take a significant discovery to necessitate the need to build that plant, because what we've established with Fresnillo over the last 2 years, we've been very successful at taking material from Juanicipio and processing it through their plants. The Saucedo plant as a preference, and then the Fresnillo plant, mainly because grind sizes are different, and there's a finer grind at Saucedo, better recovery. Excuse me. So if we have another small discovery, and it's more than what our plant can take, very likely that we'll go through the Fresnillo plants.
Yeah, okay. Yeah.
No capital, right? It's just a toll milling additional operating cost. Very accretive from a cash flow point of view. But if we get something big like another upwelling zone, second plant, certainly a game changer.
Yeah, okay. Talk me through exploration activities outside of Mexico, because, and I wouldn't mind, just recap us as well. When did Fresnillo get involved in Juanicipio? At what sort of point, I'm trying to correlate, have you in the past partnered up?
Sure. So we IPO'd MAG 20 years ago with the Juanicipio property and 2 other properties that we had in Mexico. We came on the ground in 2003 with some IPO funds, and hole 001, right? The first hole drilled on the Juanicipio property discovered the Juanicipio vein.
Yeah.
And 2003 going into 2004, not dissimilar to current times, where raising capital in these markets is very, very challenging.
Yeah.
Now, Fresnillo on the other side of the fence are watching the press releases coming out with bonanza grade silver and in these holes, and they came to see us and said, would you guys be interested in an earning? I said, yeah. And so in 2005, we announced a earn into a joint venture where Fresnillo gave us some cash. They had to spend a quantum of money on drilling, and hence the joint venture, 56-44. And once they earned in, Fresnillo were the operators.
And did the project have a resource? Did it have, or was it just discovery holes at this point?
First hole ever drilled in it, right? Okay. Discovery hole. And then around hole 15 or 16, I can't remember which one, 15 or 16, in 2006, we found the Valdecanes vein. And since then, every hole we drill around there finds silver, which is why we only have 5%, this little top corner of the property drilled. So anyway, like I said, great exploration potential there, and we will continue to explore. up in Utah, we have the Deer Trail property. It's quite a unique opportunity for us. It sits on a main structure running in the western United States from the Bingham Canyon operation of Rio down past Tintic, down the Deer Trail. We're on the same trend, slightly younger rocks, about 1.5 million years younger, which is like a nanosecond in geological time. And this is elephant country. The uniqueness, though, that we have at Deer Trail is that we are the first people in a long time, at least 75 years, maybe longer, where one company owns the surface over the whole Deer Trail system. And so we can come in and approach this from a regional, holistic exploration sort of standpoint, whereas previously the land ownership was like a patchwork quilt, and many different companies with different exploration objectives, different funding. They mucked around, right? We've come in here now with a very well thought out, structured approach, regional approach to exploration here, looking for carbonate replacement deposits. We've just finished phase 3 of our drilling, and we've hit in every hole. And this is a large system, and I think it'll take a little bit more time before we can zero in on a very significant commercial intercept. But what we've found are lots of narrow, high-grade intercepts, up to a kilo of silver per tonne, and it's a matter of learning from each hole. We're very deliberate in how we explore here. We do a hole, we learn from it, we readjust our geological model, and we're going to vector into something major. So at some point in time here, I hope to be sitting here, hopefully next year, maybe the year after, and tell you about the incredible discovery we've had at Deer Trail. Carbonate replacement deposits, high-grade silver, the historical Deer Trail mine, 465 grams per tonne of silver. We've got gold in the holes, we've got lead in the holes, we've got zinc in the holes, we've got copper in the holes. So it's a classic indicator that we're close to a significant carbonate replacement deposit. There's also porphyry centres in there, which we drill for geological knowledge, geological understanding, so we can better predict and short track the number of holes we take to discovery of CRD. When the porphyries are interesting, but they're not for us.
Yeah.
Right? But we have big companies up the road who are very interested in what we're doing at Deer Trail. So Deer Trail, as we go forward, is probably a $10 million US a year exploration program until we really hook into something big. Up in Ontario at Larder.
Before you go on to Larder,
sure.
sorry, I just wanted to ask you mentioned there are some bigger players potentially looking in. What is the neighbourhood like around Deer Trail?
Well, you've got Rio, who are operating the Bingham Canyon porphyry. Mm-hmm. Bingham Canyon 80 years ago, they were mining high-grade silver mantos. That's what we're looking at.
Yeah.
But we believe we have a Bingham analogue. So we have the porphyry centre as well. And that's why there's a lot of interest from the big companies on that. Just to the south, around Tintic, you have Ivanhoe.
Okay.
And you have a Cisco in there as well. Mm-hmm. And we know when we announce that we're at Deer Trail and we commence phase 1 drilling, we know South 32 pegged all the ground around us.
Did they really?
Right, yeah. So there's interest from main players here, and we want to get some meat on the bones here in terms of valuation for a start, yep, but also geological understanding, discovery, and then we're willing to talk. And particularly the porphyry is something that I think is a value creating activity for us, not for us to build.
Agreed. Yeah.
Or even to drill off.
Yeah.
High-grade silver mantos is a different story, but we maintain flexibility that once we get to a resource, maybe a fees or a PEA or whatever, we'll make decisions. Are we going to build our own mine there, or do we joint venture again? And do we partner up? Then do we have 2 tier 1 world-class type operating assets where we're not the operator, but we have meaningful contributions there, where you're getting 44% of the cash flow from Juanicipio, maybe Deer Trail's 49% of the cash flow. And we maintain 12 people in the company of MAG, $4 or $5 billion market cap. Nice story.
Well, it's very akin to a royalty model in a way where you can keep your own G&A very low
Yes.
and your own cut, but you're actually and because you're owning so much of these assets and they are world class, actually the revenues and the profits are much larger, obviously. So
That's right.
it's
A
quite
lot
a
of
unique.
people say we're a proxy for a royalty company in some regards, right? In the sense that we do take a bit more operating risk than a royalty company, but it's a similar model, right? We're not doing the heavy lifting. We have an operator doing that for us. We contribute capital, but we get the cash flow back.
Yeah. No, it's a brilliant model. And
Yeah.
just touch on the last Larder, please.
Sure.
Yeah.
That's a nice little one we have up in Ontario. We have 7.5 kilometres of the Cadillac Larder break, which is a prolific historical greenstone. Well, over 200 million ounces of gold have been discovered in this area. And probably it's location again, right? Each of our assets, we only have 3, but they all tick the location box. But what's significant about Larder is not just its location, sitting on that Cadillac break and sitting on what we call second and third order structures off that, which are where a lot of the modern day discoveries are coming from. It's known in the Abitibi, it's known in the Cadillac Larder break, etc.
So the Cadillac Larder break is actually, that's one of the main fault lines that Canadian Malartic is on. And
Running
it runs
from,
all the way through from sort of Valdor through to Timmins as well, right?
Correct.
Yeah.
Right.
And where exactly is is Larder?
It's near Kirkland Lake.
Oh, okay.
Right.
Okay.
And it's about 7.5 kilometres of that primary Cadillac Larder break. Now, known in that area is you have to drill below 500 metres to get the good grade.
Yeah.
There isn't a hole below 500 metres, which really attracted us to the opportunity of what Larder brings. So we raised $23 million of Canadian of flow-through capital earlier in the year. We were on a exploration discovery process at Larder. There's lots of information on the top 250 metres, lots of geological information, but it wasn't technical information in either the format that we think was appropriate for the facility, or there were it was tough times for people who were running this property, and capital was very limited. So there's lots of core that's very interesting that wasn't assayed, or they only assayed for gold. And sometimes you have to assay for other indicators to go and find the gold. It's not just about looking for gold. So we've assayed thousands of pulp samples. We've done a lot of core assay. We've done a lot of re-logging. We did a 6-month full detailed technical review before we spent any of that flow through. And we started drilling here in July, and we've just put a second rig on now, and we're getting some interesting information now. So hopefully coming into first quarter of next year, we'll be able to give investors a fulsome update on Larder. I'm pretty excited about it.
Good.
And, look, next to us is the Kerr-Addison mine. Kerr-Addison mine produced almost 11 million ounces of gold, average head grade of 10.5 grams per tonne. We can see it. It's right there from where we are, but we have no holes at depth. We're just putting the first ones down there. And one of the aspects I really like about Larder is, within a 75-kilometre radius, there's 26 underutilised or care and maintenance processing facilities. So again, from a capital allocation point of view, we have exploration success. We punch out 1, 2, 3, up to 5 million ounces of gold in the ground. We don't have to build a plant. The highway runs by it. The Trans-Canada railway line runs by it. Quebec power comes overhead to us, which is pretty cheap power. You put a shaft in, bang, you're in the cash flow.
Yeah.
So it's a beautiful little model.
Probably something you don't need a project partner for, actually, on that one.
No, you just need to put a shaft in and run an underground mine.
Yeah. Amazing. Just talk me through, just to wrap things up, just talk me through what are you expecting? Obviously, you mentioned some news flow from Larder. We'll be, I assume, getting quarterly updates on Juanicipio. But just to talk me through the next 12 months, what should we be looking out for?
Well, quarterly updates from Juanicipio is going to start to show, cash flow generation, cash coming home.
Yep.
We hope to really be able to focus on optimizing the asset now. So we believe there's some incremental improvements in recovery, but 1 or 2% goes straight to the revenue line.
Yep.
Right, so very, very accretive to the value of the project. For the first 8 months this year, it's about putting rock through and making it work. Now we know all that, it works, it's running well, let's start to optimize. Let's try and bring those costs down. So we hope to be able to, we're going to issue guidance next year, and we hope to be able to deliver on that guidance as you indicated in quarterly reports. Deer Trail, we're drilling, as we get to different stages of discovery at Deer Trail, we will update the market. One of our intentions next year is to do a teach-in, at least on Deer Trail and maybe on Deer Trail and Larder, because I think, a lot of the focus from investors at MAG has been about Juanicipio. And when we first announced that we actually have the Deer Trail property and we're going to commence exploration, our shares went up $2 on the day, and it held in there. A lot of people, and we, like Deer Trail and Larder because they put another leg on our stool.
Yeah.
And they give us some geopolitical diversity from Mexico. And what a lot of investors like is the fact we run it, we control it, right? And we're doing what we're good at. We're doing exploration. So I think, you're going to get the quarterly updates. Here's Juanicipio. Here's where the costs are going to. Here's the production. Here's the cash. It's all good stuff. And then here's a reinvigoration of the why we're at Deer Trail. Here's a teaching on Larder. Here's the results coming from here. And, hopefully there's a press release that comes out of nowhere that says, just discovered this at Deer Trail or Larder. Or we just found this at Juanicipio. This is different from Valdecones. This is a greenfields new discovery. Those 3 press releases move the share price.
Agreed.
Up.
Well, absolutely. You'd hope so.
Yeah.
No, George, congratulations on getting in
Thank you.
production. And I'm looking forward to seeing the drill results. Thank you.
So am I, mate. Thanks,
Cheers.
Peter. Really good.
Thank you.